But let's welcome our guest on board to understand all of these various moving parts in the markets and how they impact the direction of the markets. Mr. Abhishek Basu Malik, the co-founder and fund manager at Sri Rama Managers, is now joining in on this platform. Warm welcome to you, Abhishek ji. Good to have you with us. Well, once again, it's going to be tariff limelight that we are going to be focusing on. This time, as Donald Trump had been constantly indicating that pharma will see never seen before kind of tariffs. He's talked about 100% tariff on branded and on patented products. Now, of course, we are given to understand that this may only impact companies which have, exposure to large branded and patented products in the US, which they are not producing in the US. But those that are in generics so far have not been impacted. So a large part of pharma, at least from this information, might not be impacted to a great extent. But what happens from here on will again be a question mark. But finally, the pharma space. How are you looking at it, sir?
I think we did discuss about pharma a couple of weeks back, and what I mentioned then, I continue to have the same view, which is that it's going to be very difficult for the US administration to put tariffs on generics because
Yes.
that is going to hurt their the cost of medication there, and that is going to not go down well with the people. So that's number one.
Yeah.
Second, I think if you look at the price of patented medicines in the US, it's actually atrocious. I mean, if you look at the same drugs sold in other developed markets like in the EU, US patients need to pay sometimes multiple times the price, right? So, in a way, I think this is short-term negative for the even the large patent pharma companies. But over time, I think there has to be some kind of rationalization of prices across the world, even for patented drugs. Especially, I mean, there could be two kinds of prices, one for the developed market, one for emerging markets, and like that. So right now, I think two parts to it. One is don't see too much of an impact on the Indian pharma, except maybe a Sun or maybe to an extent Wockhardt. Wockhardt simply because they are in the patented pharma. At least that is the promise that they have. Sun is a fairly
Yes.
big player in the US patented market.
Absolutely. Abhishek ji, you've clearly pointed out that, of course, till the time it hits generic majors, it's still okay. But generics, it's going to be very tough for even the US markets to impact. Let me just show you and tell you what is exactly happening here. You're seeing some graphics on your screens, viewers. Remember, in 2024-2025, we had, as a pharma industry, $10.5 billion worth of exports to the US. Out of this, the branded formulations contributed $1 billion of exports, whereas $9.5 billion were largely contributed by the generics division. So you can clearly understand that this 100% tariff is to the tune of that $1 billion of exports that we have. So all of those companies that are contributing to this $1 billion will be directly impacted. Largely, as Abhishek ji pointed out, it is Sun Pharma that is being seen as the biggest player that might see an impact on the front as well. But we'll have to see what happens to a Dr. Reddy's and other companies that still have an exposure. You can clearly see Sun Pharma indicating a 10% downward opening in the implied open. The markets also on the Nifty have slipped below 24,800 as was being expected by the implied open. 24,783, 105 points lower. We'll see how it pans out in trade. Remember, the exports to pharma exports to the US on a year-on-year basis has also jumped by 20% in FY25. US remains the largest single market for pharma exporters of India. It also accounts for 35% of overall India's exports to the world as well. So that's a large chunk too. Shipments that are dominated by generics are not going to be impacted. So a 90% generics market still not touched, and 10% branded and patented market is something that is going to be impacted, is what we are given to understand. Abhishek ji, if we look at a sharp knee-jerk reaction as is being seen in the pre-open trade on Sun Pharma, what should one do if they have this stock in their portfolio?
That's a very tough call. I mean, if you have a long-term horizon,
Yeah.
you might want to hold on. But short-term is actually very murky because you don't know what is going to happen. You don't even know the fine print of this US tariff, because even last week we saw what happens if you sort of jump the gun in terms of what during H1B, right? Ultimately, the way it sort of panned out was the impact was actually very minimal, right? Because it's a one-time only for new applicants. So we don't know the details of these tariffs, whether it's, if you just have one factory, or if you just start building one factory in the US, are all your exports to US become zero tariff. If that is the case, then pretty much everybody will start off with a small factory, initiation, and then get the tariff down to zero, and then pretty much see how it plays out.
Those who may want to know a broader idea of how the companies are drawing their revenues from US in terms of the pharma companies, I'm going to be highlighting top 5 companies that have maximum revenue that they get from the US market, be it in generics or in branded names. So Sun Pharma has a 35% US revenue into its overall basket of revenues. Dr. Reddy's revenue contribution from the US is 40 to 45%. Cipla gets a 30% of its overall revenue from US. Lupin gets 40% of its revenue from the US. Oro Pharma gets about 50% of its revenue from the US. Natco Pharma gets 70% from its overall revenue from the US as well, and that's what we are given to understand from our preliminary research that we are given to understand. Of course, this will then break down to how much of this is generics and what portion is branded and patented as of now. There are some other uncertainties as well, Abhishek ji, because what Donald Trump's statement has said and indicated is that those who are building in US, they will not have to pay. Now, whether this is referring to any additional capacities, or is it starting off a new manufacturing facility? It's again a question there, because there may be some facilities of our Indian companies in the US already. If they start to expand that and say that yes, we are now producing in America, but whether that will come into focus or not is again a question. Secondly, we'll again have to see what comes in next. Is this just the first order that has come into branded and patented, and will this follow up to generics? That's when the maximum pain be felt.
Yeah, so exactly, what I said, that until and unless we know the actual details, it's very difficult to, comment, because it just, on the screen, you're highlighting the tweet.
Yeah.
Right? It's going to be very difficult to figure out whether it is, so if I have a factory, right, up and running, as long as we are manufacturing in the US, does it mean that all my products get a tariff-free end? Right.
Absolutely.
So very difficult to say that. So that clarity will emerge hopefully in the next 24 hours, and we need to wait for that.
We need to wait for more clarity. But Sun Pharma, as is being seen as the stock that is getting the impact the most, remember it has key specialty products. These are not generics products. Illumia, Sequoia, Odomozo and Winlevi, at least these of these specialty products that they have in the US are likely to get impacted with this 100% tariff, and the entire business comprises of 19% of its overall sales. So we are going to be understanding how this gets impacted. Remember, in FY25, Sun Pharma's specialty sales had increased from 17% last year to $1.2 billion, while global Illumia sales now have also grown by 17% to $681 million. So these are some of the drugs or the specialty products that are going to see an impact. We have seen some improvement on Sun Pharma impact from the first downward tick of 10% to now 2.5% lower tick. So that's some sense returning to the street at this point in the pre-open trade. 24,818, 72 points lower as far as the Nifty is concerned. Again, we are looking at both IT and pharma that could be dragging in the sentiments today. About 1.5% lower for the pharma index and IT index lower by about 0.5%. But only metals and realty that could be seeing some uptick. Metals shown bright even yesterday in overall weaker setup of the markets. Real estate that had dragged might see some short covering in trade today as well. Among the stocks that could be in focus, again you have metal counters like JSW Steel that could be in focus, construction majors like L&T, Titan could be in focus, Bajaj Finserv and some life insurance names, and PSU banks could also be in focus. We'll come back to it in a bit. And of course, PSU stocks, again, those defense and railways names, we'll try to find out how that happens. But we'll also have to keep an eye out on, apart from the pharma space, on the IT pack as well. And here I wanted to take, Abhishek ji, your view again, especially with regards to the Accenture numbers that we have got. It has beat the fourth quarter revenue estimates and unveiled a 6-month, $865 million restructuring to realign its workforce and operations for the rising demand of digital and AI. And how should we extrapolate that news for the Indian players at large, and what could be in the offing for the upcoming earnings starting first or second week of October now? How would you look at the IT stocks that have also given up? I was reading that out before you joined in. 2 lakh crore rupees of a market cap in the last 5 days of a sell-off. How are you looking at that, sir?
So just one comment on Sun Pharma and the patented
Okay,
manufacturers before I get into it.
Sure.
See, one of the reasons, and I'm just playing the devil's advocate here, one of the reasons why patented drugs have been allowed to price at a significant premium is because there is no competition, right? Somebody has done some research, they've got a patent, and then they have exclusivity. Now, if you just stop reacting in a knee-jerk way and think that, what if Sun Pharma says we don't do anything, right? We'll just pass on the tariffs to the customer.
Yeah.
Right? It's not that for those drugs, not only for Sun, but for the global players also, not as if that there is any alternate which is easily available. So ultimately, if these big pharma just decide that they will not blink, ultimately what is going to happen is that the US consumer is going to pay 50% or 100% more than what they were paying earlier. So that is something that we have to see how that plays out, because it is not that easy big pharma has been doing this for many years, right? So they also have lobbies, they also have their way of getting through this system. But we'll have to see how it plays out. Coming back to your question on IT and on Accenture numbers, I think Accenture sort of delivered what pretty much they had guided. They had guided for about top end of the guidance was about 5% constant currency, and the revenues they delivered was roughly around 4.5%. What I found was, which was most interesting from an Indian IT services perspective, was that the management actually highlighted that the increased traction on AI and AI services is not becoming deflationary. It is not impacting revenues, because what is happening is that the cost savings that the clients are getting is getting reinvested into more technology initiatives. So that, I think, is something that slowly people will realize that that is going to start playing out. So at some point, maybe this quarter, maybe next quarter, I think we will start seeing a lot more sanity return to the IT pack.
Okay, got that. Now we'll just shift our focus to the markets, and it's just about a minute to go before we start to see the markets tick. And we'll have to keep an eye out on the Nifty IT, the Nifty Pharma indices for the first, and both the indices for now are indicating of a lower start. Pharma is something that is going to be reacting first to this tariff news that has come in. The index is right now looking at a 1.5% lower start at 21,623. So we'll have to look at that. And of course, we'll look at some of the stocks there. Yes, we have the first tick going now, 24,845, 51 points lower. Not too bad for the markets as a start, as a reaction to this tariff news that has come in on the Nifty at least. There's a 0.14% of a decline. So it's not very bad as was being anticipated earlier into the markets. Let's look at the IT and the pharma indices. The pharma index is the one that has lost over 2% right in the open, and we are seeing even the IT index down by about 0.5%. But let's clearly pull up the pharma names. Sun Pharma is the top loser in trade today at 1554. It is down by about 4.6% in trade. Cipla follows with 1.5% of a loss. Dr. Reddy's is also among the top losers, 1% lower for this one. Among the other stocks that are lower apart from the pharma space, you can see Titan that's lower. ICICI Bank, Infosys and Power Grid as among those top losers. Media, metal stocks and infra only sectors that are holding up, but pharma, consumer durables and IT now the top three laggards on the Nifty as of now. When we look at the PSU stocks, you do have some momentum going again on defense names like HAL and BEL. Remember, HAL had signed this big deal with government yesterday to supply 97 Tejas fighter jets, and therefore you are seeing some improvement. Brokerage houses are also penciling in higher targets, even upwards of 6,000 kind of targets are now coming in for HAL, and that's continuing to be in focus. 0.5% uptick for BEL is what you see. And among the top movers, you also see some metal names like JSW Steel. L&T now is the top mover today. Hero Moto and Hindalco and HDFC Life are the other movers. Some more breath of wave on the positive side on the auto pack after having lost quite a bit of ground yesterday is being seen. But let's also look at the Nifty 500 names. Anything to mark here at this point in time? Rights, I think, on that order flow that has come in, 4% higher on this one. But not too many names that we can mark out right at the open in trade. But let's come back to the discussion with Abhishek ji. Abhishek ji, 2.5% kind of a fall on the index level, 4.5% fall on Sun Pharma. The other stocks also reeling under some pressure, but like we had marked out, the assessment is still to be done as to what kind of an impact is coming on individual companies. What should one do overall with the pharma stocks at this point? Should one look at this or just stay put and wait for clarity at this point?
I would think so, because you know, the first knee-jerk reaction could possibly be the wrong one, right? So we don't need to react, because primarily most of Indian pharma is generics, like you also, you showed the graphics, right? So nearly 90% of Indian exports is generics. So instead of reacting all that much, let's give it some time. And in any case, the biggest impact company has not, it's not down 10% or something like that. So 3.5% for Sun Pharma down. It could happen in a bad market day anyway. So let's probably wait and see how the what the details are, and then from the initial reading of the tweet, I would say there are a lot of ways to circumvent these the kind of tariff that is being talked about. So we'll have to wait and see.
Okay, fair point. Let me just also welcome our other guest on board. We have Mr. Kunal V. Parar now joining in, Vice President of Technical Research at Choice Equity, to share with us the technical view on the markets. Well, fifth day of losses is what we've already seen. We are sitting on the sixth day. Last trading session of this week, this has rather turned out to be, week which has stalled the momentum on the upside that we saw from the previous 2 weeks. Kunal, how would you really look at the market sentiment at around 24,826?
Well, good morning. And but obviously, we are seeing negative impact from the US side. The way the US levied the tariff. Right now, Nifty is trading 24,816 below its 100 days moving average. And if it's close to this 100 days average, then further downside would be there up to the level of 24,500 to 24,300. So overall momentum, overall sentiment is on negative side only, and further downside would be there, based on the ongoing momentum. So
Kunal, we lost your audio in middle. Yeah.
Hello. Yeah. So present level, we may see some downside momentum in the Nifty itself up to the level of 24,500 to 24,300.
Okay. Any suggestion on the pharma names? What do you do with this sharp dip that we are seeing across the board? All the pharma stocks, meanwhile, viewers are in the red. None of them is in the green in trade today. So Natco Pharma is down 3.5%. Gland Pharma is down 3.3%. Sun Pharma is down 3.2%. Biocon is down by 3%. Ipca Labs near 3% loss. Divi's Labs, Ajanta, Laurus, across the board, you're seeing at least 1 to 2% of a loss there as well.
Well, from my side, it's like wait and watch, because we have been witnessing some bloodbath in the pharma sectors, and for the downside would be there based on the ongoing sentiment. Let's wait and watch for the time being. Let's set down this negativity. Let's settle down this volatility, and then we'll decide where to put our money, where to park our investment money. So as of now, I'm not going to suggest. I'm not going to recommend any pharma stocks, even for trading or even for short to medium term purpose.
Okay, got that. Now, viewers, all the sectors have slipped into the red, given up the initial bout of gains as well. India VIX is the only index that's hovering at 11.04, now another 2.4% higher in trade. Abhishek ji, coming back to you, all that momentum and the markets have also slipped below 24,800, 100 points lower in trade. Abhishek ji, coming back to you and trying to understand what's really happening in the overall markets. One, we do know that there is this constant uncertainty on tariffs. Just when we were hoping that talks are again progressing, our own commerce minister went to the US to probably plug some of the gaps that prevented the sixth round of tariffs, and probably further to that move as well. Despite that, we haven't seen any kind of a positive flow coming in. This is in fact another negative news that's come in from the US. Second of all, despite all the good news that we are seeing on ground in back home in the domestic market by way of festive spirit in the air, GST rationalization, huge sales and huge demands in the consumer-oriented sectors. Despite that, the markets have actually somehow lost the momentum. What do you think is the key worry point for the markets at this point, Abhishek ji?
That two reasons, I think. One, so first of all, the tariff talks with US, I have, I have to just say that it's meaningless. The reason I'm saying that is EU has a tariff, agreement with US, right? Now, if you see the biggest impact of this pharma, tariff is going to go to the EU. Who are the biggest exporters of patented drugs to the US? It is Ireland, it is Switzerland, it is Italy, it is Germany, right? So, it doesn't mean that once you have a tariff deal with the US that things are going to remain the way it is, right? There could be more tariffs, different tariffs, and things like that. So we'll just have to get used to this kind of uncertainty from the US president, at least for the next few years that he's there. And I think slowly the business world is also going to sort of start discounting the fact that these kinds of things will keep happening. Now, what is the impact of this directly? It is that valuations will start contracting because you, as an investor, you have significant uncertainty about what is going to happen in the future. So the terminal value of the businesses that you are owning is uncertain. So valuations will start contracting. Now, the other reason why I think the Indian markets have become a lot lackluster is the huge amount of IPOs, that has hit the street. Every day we have 3, 4 IPOs closing, and the net money in the market is, static. So ultimately, people would be churning. There are a lot of people who play the IPOs, right? So there are people who are, booking profits in one, putting it in the other, and or maybe taking out money from their existing holdings, putting money into the IPO. So that is, to my mind, another reason why the secondary market has sort of been in lackluster, because last 2, 3 days post this GST rationalization has kicked in. The feedback from the ground has actually been very, very good. I've been speaking to some distributors, auto distributors, some retail folks, and the inquiries, the sales have, been really, really good. So that is going to get reflected, some part of it in this quarter's results, and probably the bigger chunk will come in the next quarter results. So uh, I think we have to be hopeful that this is a passing market phase of uncertainty. It's dragging on. We've actually spent more than a year in this kind of an environment, but I think we're probably closer to the end of this phase than we were before.
More optimistic now that we're probably towards the end of all this uncertainty, and that's what we should be looking at. So Abhishek ji, how are you guiding your clients at this point in time? Many of the clients or investors are at this point in time feeling disheartened that the markets have actually given virtually no returns or very low returns in this year so far, just about 4%. How are you advising them at this point in time to continue to invest in regularly into the markets? Which are the pockets to really identify where probably the first leg of outperformance can begin, and therefore you get to cover up a lot of your lackluster move in your portfolios as well? How would you explain that?
So there are two parts to it. Either we can think that 2 years or 3 years back we got a good rally, then the last year has been sort of consolidation of that, which is, in a way, I think it's a good sign that markets are not tearing away and completely going berserk. It's taking time to digest the gains. It has taken off a bit of the gains, and that is the nature of the markets, and there is no way around this. The markets is not a linear return providing system. There are going to be ups and downs. It's a roller coaster ride. So now we are getting jerked around, and we are probably at a point which is not a place where people are liking it, but you have to endure this part if you are looking to remain invested and get better than average returns over the longer period of time. It's just the nature of the market, the way it functions.
So, have you identified any pockets where
I think it's very clear that you have to be invested in India. I think world over, what we are seeing, and again, this has been led by the US president, or if not led, I think sort of reinforced by the US president, is that every country now needs to sort of fend for itself. And that is where I think the Atmanirbhar Bharat concept comes. And we have to be invested in companies which are more domestic focused, right? So, you look at infrastructure, you look at cement, you look at capital goods, manufacturing, domestic travel, anything that is related to Indian consumption, I think ought to do well.
Okay. Any key stocks before we let you go, sir, that you may have identified or added in this recent, space after the GST rollout has happened or when the announcement was made? Have you made any changes to clients' portfolios there?
We've just making incremental changes, nothing major. I think our portfolios have been positioned more for the India theme
Okay.
from the beginning, at least for the last couple of years.
Okay, fantastic. Thank you so much, Abhishek ji, for being with us on the program and highlighting all those insights for our viewers. It's all